G'day everyone, welcome back to Pete's Investing. It's June 13, 2023. This is the Aussie New Zealand currency update. On our weekly, we're broken up into a bullish momentum, likewise on the daily, so taking only long trades predominantly. Likewise on the hourly, it's also showing a bullish momentum, but just be mindful we've got this bearish divergence on the CCI, and we could be seeing the end of this rally in the coming hours possibly, or even days. Let's go look in a bit more detail on the weekly. Got triple moving average of the price chart. It's broken above this descending trend line, and that's in alignment with the moving averages of the CCI 150, giving us this bullish signal. On the daily, likewise, a bit more detail here. We got the same bullish signal shown here. We did have a bullish divergence on the CCI, and that played out and worked well with a bearish divergence on the price chart, and it did break above that initial channel, which was our entry point to go long in terms of the divergence long. And then it actually hit our initial target, which is that first Fibonacci range between 61% and 78%. So actually punched through that and went as high as the 88%. It's currently resting around the 88% level. That's on the daily. And on the hourly, you can see here there was we did draw this in our last video, this bearish divergence. And the CCI is continuing this downtrend versus a bullish divergence on the price chart. Now I'm going to adjust this, so it's going to first of all move that CCI to that lowest point, which is still a bearish divergence. But you'll notice here we've got this, it's going to get rid of some of these channels, make it a bit cleaner. I'm going to leave that Fibonacci in there because you can see there that's, well actually you know what, I'll just move that as well to that point there. And I'm going to remove this target. Now you wouldn't have entered at that point, so there's no loss there. But the way you would read this now is we could draw that to that level there in terms of the highs, and then you would draw a new channel or a new low between those highs and the lowest point, which would have been probably there, the lowest candle within that divergence range. So basically anything that breaks through the bottom of that channel, then you'll start placing a target. Now in terms of the initial target area, that would probably be the 23% here. So you would, let's put a little rectangle there in terms of that area there. That'll be your initial target area in terms of a retracement possibly. So for this to work, we need to see the CCI continued in a downtrend, and likewise we need to see the price break down and also break below this channel, and ultimately that'll be our initial target area. So these usually work, but sometimes they don't work. For this to fail, we need to see the CCI break up, and likewise we need to see new highs in the price chart as well. Now while I'm here, I'll show you also this back test, this bullish back test in blue and a bearish back test in red. And the way that works is you take long trades only when the price is going in your favor. If I go out to the weekly and daily, you'll see there predominantly during that period, during the start of 22, you can see there predominantly long trades throughout 2022, and predominantly long trades throughout 2022 as well on the weekly. So when the weekly and the daily align, then you take the long trades on the hourly. Likewise during that period, end of 22 to start of 23, they were primarily short trades on the weekly. You can see there during that same period there are a few short trades on either side of the new year, and likewise you would have taken short trades during that period on the hourly. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.